Yeah, good morning, everyone. So yesterday the budget which has been presented by the uh, government are of more of a non-event from the earning perspective. Uh, Most of the company do not see any change in their earning post this budget. As such, the estimates for the companies remain same. As such, thereafter also the only point is that the impact on investors rather than on the company or earnings. The impact on investor and investors are been increased substantially uh, on all respect. Long-term capital gain, short-term capital gain, STT, uh, no bringing tax on buyback, all these has been put on the investors, and this had some impact sentimentally, but ultimately the market is driven by the earnings, and earnings has remained same, and that such we say saw the market also bouncing back. Uh, so in all, what we see that in the budget, capital market, sorry, the capital expenditure has been kept similar to interim budget, which is up by around 17%. But if you see the sub-segment which were driver of the equity market in the recent past, like defense, road, railway, has not seen much increase. Defense has increased by around 8-9%, but road and railway has increased, very marginal increase of 3-4%. Apart from that, even the older schemes has also not seen any great change, no any great changes, except the two state has got additional allocations, whether it is Bihar or Andhra Pradesh. More seems like political compulsions. So overall, what we see that budget was more of a consolidation of the accounts in the sense that they had further reduced the uh, fiscal deficit from 5.1 expected in interim budget to 4.9. This was mainly driven by the increase in dividend from the RBI. So extra money out of 1,46,000, they had used around 75,000 for reduction of the debt. They had assumed a lower tax collection of around 19,000, and the balance has been used somewhere in the other schemes like benefit to the two states and then some other benefits. So in all, it's more of a neutral type of budget for the market. Now things will come back to the earnings, and then it will be driven by that. Apart from that, the international market has seen some weakness. Yesterday, US market was down and futures are also soft. And today morning, Asian markets are also indicating softer trend. Commodities are seeing corrections across the board. Even oil is down by around $1. Aluminum, copper, oil, uh, ore, and steel all are down. Iron ore is down by around 1.5%, and steel down by around 1%. So, in all, we are seeing some softness in the international market from order aspect. We had seen yesterday a good bounce back, so there could be some profit booking in today's trade. So, we may see some corrections in the today's market. I'll request technical team to take up from here.
Thank you, sir. Very good morning, all of you. So we have seen a very volatile move in yesterday's trading session. Although Nifty has made a low of 24,074 and then bounced back quickly from those levels and has closed nearly flat at around 24,500 odd levels. Talking about Nifty, Nifty is currently following a range where the upside resistance is at around 24,550 and where the downside support is at 24,400 level. So this is the 150 points range which Nifty is currently inside it's currently trading inside the range. So any move above 24,550 will take Nifty toward 24,700 to 24,800 levels also. Whereas if the downside range of 24,400 is broken, then Nifty will again test 24,300 to 24,100 levels on the downside. For today, we are expecting a negative opening since it is indicated from the global markets, and we can expect some volatile move in today's trading session. I've already informed about the support and resistance. So moving on to Bank Nifty. Bank Nifty has given a breakdown of its trend line in yesterday's trading session, and it has closed below that. It has closed around 51,800 levels. The immediate support for Bank Nifty is at currently at 51,550. If that is broken, then we can test 51,270 to 51,000 levels also. Whereas any positive move in Bank Nifty will only come above 52,150 levels, then followed by 52,500. Talking about Fin Nifty, we have seen some volatility in this index as well. It has closed around 23,350 levels, where the downside support for Fin Nifty is currently placed at 23,240, followed by 23,150, whereas the upside resistance for Fin Nifty is at 23,500, followed by 23,640. Again, it is going to be a very stock specific market, so we request everyone to trade with strict stop losses. We have initiated a buy call on Escorts in the closing trade in yesterday's trading session. If you get it above 4085, can be bought for a target of 4185 by keeping a strict stop loss of 4035. So that's all from me. I request Nirav to take the call forward.
Yeah, thank you, Ayush. On the derivative front, the data has become quite positive now. As I said, VIX was increasing because of the budget announcement. That has come down drastically. 17% decrease in VIX. So from 16, it has come down to 12.5 levels, which is at very, very comfortable levels. Open interest has come down drastically as well. We have seen about a 12% correction in open interest, which is huge. There's a 15% correction in the PCR as well. So all in all, after yesterday, we have seen most of the indicators become positive now, or towards the positive zone. So now we can see further buying in Nifty, after the initial volatility, and there is a likelihood that Nifty can probably now look to reach 24,800 to 25,000 levels. Importantly, 24,000 was retested yesterday, and that was the strong support area. And now, once Nifty moves above the 24,500 levels, which is a small resistance, it can witness further buying going forward. So yeah, one can look to buy on a breakout of 24,500 with a stop loss of 24,400. Even though the SGX and the GIFT Nifty and the other global indices are negative, we might see some buying coming in the later half of the session. From the stock specific front, FMCG did pretty well yesterday. It can continue to do well. However, most of the sectors and stocks did witness some selling pressure, and specifically oil and gas and fertilizer. But they are likely to bounce back soon. So yeah, look out for the same. They can probably give good, decent returns going forward. So they are the sectors that can, be bought in the next couple of trading sessions. And that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. Bajaj Finance result is in line with expectation. AUM crossed 3,50,000 crores and was up by 7% sequentially, 31% year on year. Operating result was healthy. However, credit cost increased to 2% after many quarters of remaining at 1.5, 1.6% band. It was in this narrow band for almost 9 quarters consecutively, but this quarter it has jumped up. And also it was higher than the guided range of 1.75 to 1.85%. Management cited a muted collection efficiency due to heat wave and election-led disruption as the two reasons for uptick in stress pool. This resulted in profit growing by just 2% quarter on quarter and 14% year on year, much lower than loan growth. Asset quality was stable. We are neutral in near term and positive in long term. Mahindra & Mahindra financial result is in line with expectation. Loan book was at 1,06,000 crores, up 4% sequentially, 23% year on year. NIMs are disappointed, resulting in profit before provisioning coming below estimates. However, lower credit cost resulted in profit coming in line with estimates. So profits were up 45% on a year-on-year basis. Seasonally, of course, quarter one is always weak for automobiles. So on QOQ basis, profit was down 17%. Asset quality was stable, and we remain positive on Mahindra & Mahindra Financial from long-term perspective. ICICI Securities result is okay. Revenue was up 6% sequentially, but profits were down 2% sequentially. Profit gives a better picture because it includes the interest income as well as expense and gives us the net figure. Even if we see the performance of broking and distribution, revenue was up 5% sequentially. Profit before tax was down 3% sequentially. So that's why we are neutral on ICICI Securities. ICICI Prudential Life Insurance result is above expectation. APE grew by 34% year on year. However, VNB grew by just 8% as VNB margin came down to 24% against last year's June quarter 30%. This decline was mainly led by increase in ULIP mix, which increased from 39% last year to 51% this quarter. Simultaneously, the protection mix declined from 24% in last June to 18% in this June. Despite this, VNB was up. VNB was 8% ahead of estimates, and that's why result was above expectation. We remain positive on ICICI Prudential Life. Thank you.
So apart from this, Hindustan Lever reported numbers and numbers came ahead of expectations. The volume growth came in at 4.24%, 4% versus expectation of 2.3%. And as such resulted into revenue growth. Though there were some price corrections, as such the revenue growth seems only 1.4%, but is still ahead of expectation. EBITDA also had seen a marginal up move. It has come at 23.8% versus expectation of 23.6%. So overall result has come ahead of expectations. Stock has performed in the recent past and had expected some improvement. So quite possible we may not see any great upside from here in the stock from the current price perspective, as the stock is trading at around 52 times FY26 CPS. Then Huhtamaki India Limited has come up with the numbers. This is more of a packaging company, and the numbers were below or declining, mainly on account of increase in raw material cost, and that has reduced the gross margin by around 300 basis points quarter on quarter. EBITDA margin also saw consecutive because of this impact on the EBITDA margin as well, which has come at 5% versus last quarter 6.7%. So overall results were below or declining, and may see some corrections in the coming in today's trade. And then DCM Shriram came up with the number, and numbers are showing improvement. Though sugar division has shown declining trend, but PVC has shown good improvement. As such, that has compensated the decline of the sugar division. Finesta remained more of a flat. Seed also business remained more of a flat year on year. So overall, because of the PVC price increase, the benefit has come for the company, and that has resulted into performance of the stock. So result has shown improving trend, but what we see that the PVC prices from the July level are showing some corrections, so which may not sustain this profitability may not sustain in the coming quarter. So outlook is neutral for the company. Then United Spirit came up with the numbers, and the numbers came ahead of expectations. Revenue grew by 8.3%, and EBITDA margin has shown improvement, which has come at 19.5% versus expectation of 17.6%, and last year 17.7%. This was mainly driven by the improvement in the gross margin, which has improved by almost around 100 basis points. So the result is ahead of expectations, but valuations are already at around 64 time FY25 or maybe around 55 time, 54 time FY26 earning. So any though the stock may remain positive today, but no great opportunity for any run up from the for the stock. So that's all from us, and I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So, in today's session, we might see some pullback as international prices are recovering. Gold and silver are expected to pull back. So, one can initiate a buy in gold around 68 650 levels and maintain a stop loss of 68 350. On upside, it can test 69,000 to 69 200 on upside. Silver also, one can expect prices to test 86 86,000 86 200 on upside. So buying around 85 200 with a stop loss of 84 500 is recommended. Though pullback after testing 86 500, there could be some profit taking. So watch out for that. And in metals, copper, uh, there could be some pullback from 800 levels. 800 is a support area, so a pullback till 810 to 12 is expected. Yeah, so maintain a stop loss of 795. And zinc prices can test 61 to 62. So buying around 258 with a stop loss of 256 is recommended. Crude oil, there could be some pullback and prices are expected to test 65, 65.50 on upside. So buy around 64.50 with a strict stop loss of 6400. Again, from 6600, one can initiate a sell and maintain a stop loss of 66.50. In natural gas, we are expecting prices to test 177, 175 levels. From there, one can expect buying. Buying can be witnessed. So buy with a strict stop loss of 168, and again on upside 187, 190 is the area where it can test. That's it from us. Thank you very much.